Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Monday, June 23rd. The stock market was unable to muster a gain on Monday despite dropping more than 3% last week, marking a disappointing session for the bulls. Continued concerns over financials weighed on sentiment, as did a 1.2% rise in crude prices, despite Saudi Arabia announcing plans to increase its output by 200,000 barrels per day, or 2%. The stock market settled the session near the unchanged mark, with 6 of the 10 economic sectors in the green. The Nasdaq underperformed with a decline of 0.9%, with weakness in large and small cap tech. The financial sector fell 2.7%, extending its year-to-date decline to 26.5%. Several factors contributed to the selling interest. Citigroup is preparing to lay off 10% of its investment banking staff, or 6,500 employees, according to reports. The financial sector was downgraded to underperform from neutral at Goldman Sachs, according to Reuters. Finally, AIG had its earnings estimates cut at Credit Suisse. The consumer discretionary sector slipped 1.6%, as it was also downgraded to underperform at Goldman Sachs. The energy sector soared 3.7% on the gain on crude prices, which helped to offset weakness in the consumer discretionary and financial sectors. All 39 stocks within the energy sector posted a gain, with large cap names providing leadership. Walgreens was the sole item on the earnings calendar. The retailer reported an increase in quarterly profit compared to last year, but its earnings of 58 cents per share fell short of Wall Street's expectations by a penny. Although the earnings calendar was light, there were plenty of merger and acquisition items to keep market participants busy. Farm products company Bunge is buying Corn Products International for $4.8 billion, including roughly $400 million in debt. Waste companies Republic Services and Allied Waste Industries are going to merge, with Republic paying roughly $6 billion in stock to acquire Allied. Synthetic material manufacturer Huntsman is suing private equity firm Apollo and 2 partners for fraud. Huntsman claims that it was induced to terminate its merger agreement with the Dutch company and enter a merger agreement with Apollo affiliate Hexion Specialty Chemicals instead. Last week, Apollo filed suit in an effort to get out of its $10.6 billion buyout of Huntsman, citing Huntsman's increased debt and lower than expected earnings. And finally, Halliburton spiked to a new 52-week high after the oil services company said it is no longer pursuing a $3.6 billion acquisition of Expro International, according to reports. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a good evening.